Okay, let's get started. Support and resistance. Very fundamental and very necessary. Support is where, as the name implies, when the stock pulls back and it bounced off. In this example, right here, it's very clear. This is a support line. When you connect all the lowest low together, where the stock instrument, the price action actually bounces off, right? And then it went to the top. Over here, resistance is where it cannot go punch through until at this point, eventually, it actually went through. Once that resistance got broken and the stock went higher, that resistance actually became support. So right here you have just a support where every time it came off, the stock bounces off and moved up. And then the resistance level is where at the peak, at the top, it bounced off and came back down. So in this example, it moved up and down, and at some point buyers all comes in and start buying up and broke the support and broke the resistance level, and that resistance line, this becomes support. And then eventually it will find a top, bounces off, and that top, when you connect two tops together, you have your basic resistance. Your basic support is when you connect these bottoms together and you have your basic support, right? So let's go to an example. Right here, I draw a couple lines. Let me take off this one first, right? The right one. Let me take out the right one. Right here, I have connect these bottom places of the price action and I find a line where I connect the most bottom. That will be my valid support line. Right here, it broke through. It broke down. Sellers push it down. And that support actually now at this right here become resistant. Eventually, buyers came back in and bought it all the way up and then actually broke through again. So that right here, that resistance became support. So let's make this more clear. Right here is actually a resistance line. The support became resistant on the red line. When it broke through it and broke down. When the price action broke up and through it, that became support again. Okay, so nothing is absolutely changed. It's constantly changing. That's the nature of the stock market. Right? Stock market is like us. It changes mind all the time. This is why I want to look for confirmation. Right here, when it went through the support line, that support became resistant. Right. Eventually, find a bottom, turns around in this example, and then broke through again. So that resistance became support. You can see eventually it came down to this line again, bounces off. Right here, bounces off. Right here, initially actually bounced. It penetrated and bounced off, but eventually it broke through again. So from here forward, this is actually, okay, around there. That, again, become resistant from support. When it broke through, that is resistant, right? Very simple stuff. Here's another line I draw, a support line. I like to use white. You can use any color you like. Right. This is a matter of color. I just connect the most. In this case, I didn't connect the most bottom over here. I connect the lowest bottom over here. That makes sense to me on this time frame. In actuality. Okay, from here to here, I connect the lowest low bottom. Right? The other line, I can kind of get a line where it touched the most bottom, but that has many penetration. I want the least penetration. On the first example, that's one penetration. Okay, I can do it. If it's more than one penetration that went through the support line, it becomes weaker and weaker on that support line. So I just take the most, the bottom, the most bottomest points and connect them. Right? I'm using this line to help me gauge the direction, the overall direction of the instrument. Like on this time frame, from here to here is an upslope, so it's basically an uptrend. Right? And then over here is actually a downtrend from here to here. Now notice again, this resistance became support from here to here. All right. So they change hands. It flip. It could flip. All right. So I will be shorting here. I'll be shorting on these levels, on these bounces, and then over here, once they penetrate through, my short is over. I should have got out. Take some losses if I need to. I should have got out. If I short here, well, it's a short here, and it broke through this right here, right? The most recent bottom, I should take profit. I should have taken profit. I should have taken profit from when it broke through this line. Anyway, if I short here, because it bounced off those resistance, I look for the most recent low. Could be here, could be here. Right? This is the first low and second low. I could take profit when it broke through this, which is here. Or I wait a little, let it go further. Over here, I definitely would have to close the trade on the short, took the profit. Okay, and then eventually, when it broke through, if I took this trade, went up, right? We're here when it broke through this level. We broke through this top over here. Change the color. Let's change the color. Better color so you can see better. Right. If I say okay, it broke through the resistance, and I'm gonna go long on this example, then I would take profit when it broke this peak over here. Right. I look for the most recent high, and this will be my first profit level. Right. And then what's my stop loss? Either it broke through this, right, make low actually. Right. Now this is a tricky one in actuality because I have a down slope overall. I have a down slope on the resistance line. I want to actually go short. I actually don't want to go long. Right. But for the talking point, right, if you happen to go long, then you would take profit on when it broke through the last peak on the price section. And your stop loss is either it went lower than where the breakout is, or it broke through the support line where it was resistant here, and then it broke through, it became support line. So when it broke through this line, right, but this is a weak trade if you go long on a down slope. You want to short the down slope. Again, I always say go with the trend, trade with the trend. Don't go against it. As you see very obviously, all the up, I cannot break through the previous peak. It's very weak. It's very weak. This is the Dow Jones Index right now. It's actually, overall, it's still although it's above the previous resistance line, which has become support line, but it's a weak up over here. The price action tell me otherwise. Okay, so I don't really want to go long, but I don't want to go short either on this. There's no play in actuality. I'm not playing the Dow Jones Index. I'm not. Right. On the other hand, the QQQ, right, the triple Q, wow, this is nice. This is an uptrend. Okay. So I actually have a support line, a channel, regression channel, which draw me the nice support line right here. You touch 1, 2, and 3. If I see 3 places nicely touched like this, it's a nice support line. Right? And then this kind of a resistance line, and it broke through, but it was subtractive. I don't want to play the breakout on this. Actually, I want to play the retracement. This is a really good example. Right here is a really good buying point. Okay. Right. Now, let me take out some of the line. Let's clean this up a little first. I have uptrend, up regression channel, up channel, and this box is where I find the previous resistance area. I draw a box. Okay. I like box. I like areas, not just a line. This you learn how to draw support and resistance line. After that, extend it. Make it a box. Right here, make it an area. Make it a zone. Because nothing is absolute. You penetrate more, penetrate less. This is area. This is what I do. I draw a line and then I look for support and resistance boxes. Not just a line anymore. Alright. So after you know how to do the line, which is pretty simple, if I taught you, and there's many other videos that will teach you how to do it. Do the box. Right here, I drew the box when it was around here. I connect the previous broke down. This is a broke down or a downtrend, right? I try to find some important level, right, on all the time frame that I want. The more recent the time frame, the more relevant it is. Actually, but on this example, right, when it was trading right around, let's get this bigger. Okay, let's look at it. It was trading to here. It was making this whole area of congestion. You see how the bars kind of like dies down, become a very tiny bars, right? Little tails, start congesting. So this is an area. So I draw a box, and then I was like, oh, let me extend this box all the way through and see how far I go back. I actually go really far back because this downtrend, I couldn't find any other point until here. This is where I stop it. Okay. So on this example, I'm like, okay, I can draw from a box, from a small area box that's supposed to be here. I pull it back. Is it relevant? Maybe not. To tell you the truth, but I was able to pull back and see how far back it went until it touched some significant area where I can drop it in another one of these area box, which is all the way back here. Right. So I use that as a gauge sometimes. Now this is where it's subjective. You have to give yourself a lot of leeway. Say, okay, this area I can pull it back, or I can just leave it and have a box just right here, this area. Right. The whole point is when it broke through this purple box area, that resistant area, right? I am now waiting for a pullback. And I was actually looking for false hammer, a price action, the hammer, a candlestick pattern hammer to go long, but it never gave me that. It actually gave me this bar instead, and that's why I actually didn't went long. I did not get my price confirmation. But if that bounced off, but I want a better chances, a trade that give me better chances to win. So in this case, I didn't took it. But some trader, or actually most trader, might have actually taken this signal and say, oh, I'm going to go long here because it bounced off. Where it was resistant, now it's become support line. It actually bounced off. But on this bar and take the trade next day, that's a little bit less chances for me in my view. So I wait. I will wait for price action to penetrate and come back. I want to see clear indications of buyers are in charge again. Right. So over here, I think it's just going to drift sideways at this point. So I didn't trade, but it's a possible pretty good setup. Okay, 60% of winning chance, I would say 60 on this trade, and it did actually. But where's your profit taking should be when it approach the previous high. That's where you would take profit. That's how I would take my first profit. Maybe I took it all, close the whole trade, or just sell half, 1/3, but take some profit. When you win some, take some. Okay, that not only feel good, you lock in some money. Yeah, so support and resistance. Pretty fundamental, but give you areas to play with and give you a better picture of where price action, where people are selling, where people are buying in this important point. You make these lines that either touch a lot of tops or touch a lot of bottom. Okay, fundamental stuff. Play around with it. Draw a lot of line. Adjust them, and when you do this enough, it just takes practice, and you get a better picture of everything, and you find out where the levels where you want to take action and place a trade, and where you find the confirmation of price action. Okay, that's it for this one. Thank you for watching, and then I see you next one.